Hello and welcome to Mukoya Finance. My name is Zaruddin and I'll be your finance tutor in this class. In this tutorial, I will show you how to build a balance sheet of a typical manufacturing company from scratch. Having gone through some of the line items within the components of a typical balance sheet in the previous videos, we will use these line items to build a simple balance sheet. So let us assume that Company A is building its balance sheet as at 31st December 2021. The company has $3,000 in cash, has invested $2,000 in treasury notes, and holds $1,500 worth of another company's commercial paper. We can aggregate these three items to have $6,500 in cash and cash equivalent. The company also has $2,000 in publicly traded equities and $5,000 in publicly traded bonds. This gives us $7,000 in marketable securities. Additionally, the company has $7,500 in accounts receivable. The company also holds $9,000 worth of inventories consisting of raw materials, work in progress, as well as finalized products. Company A also paid an insurance premium for future insurance coverage, which is regarded as an asset. Company A also owns a land and has a building in which it operates. It has machinery in this building. Total cost of the land, the building, and the machinery is $18,000. Additionally, Company A also owns a building which it rents out and is valued at $22,000. The company also owns patents and licenses worth $2,500. At the time the current owners of Company A bought it from the previous owners, the purchase price was $15,000 more than the value of the company's identifiable assets, and this represents the goodwill. Finally, the company has some financial assets which are long-term and includes investments in stocks, bonds, and derivatives which are valued at $9,500. Put together, the value of the company's assets is $100,000. Note, this amount has to equal the company's equity plus its liabilities. On the liabilities side, the company has $5,000 in accounts payable, which represents a current liability. It also has $5,000 in unpaid salaries, which is also a current liability. In terms of long-term liabilities, the company has a long-term bank loan of $30,000. Another long-term liability is deferred tax liability of $3,000. On the equity side, the company has $30,000 in common stock as well as $10,000 in preferred stock. It also has $12,000 in retained earnings. And finally, the company has $5,000 in other comprehensive income. And the total liabilities plus equity gives us $100,000. Note, this is the same as our total assets, and therefore our balance sheet is balanced. It is important to note that all the items we have here are aggregates from the company's records. And this brings us to the end of this video segment. In the next video, I will explain another financial statement, which is the statement of comprehensive income, also known as income statement. If I have in any way made you understand balance sheet better, please hit the subscribe button and follow my channel in your quest towards becoming a financial expert. See you in the next video.